You know, it's funny, I know her well. Yeah, you should. But we usually just. There are plenty of opportunities in my country. Oh, what is it? I think my picture, 6 feet tall. Just a big and. You know. I'm sure. So for sure.
Good morning, everyone. We are just waiting on a quorum. Please bear with us for a moment.
Morning. I'm sorry that I'm a little late, but I'm delighted to be back at a meeting. I want to thank everybody who's watching online and thank everyone who's participating. And how about if we officially start the meeting by doing a roll call?
Yes.
Okay,
Governor Michelle Lujan Grisham,
present.
Commissioner Stephanie Gardner, Treasurer Laura Montoya,
Good morning, present.
DFA Secretary Wayne Props, Nick Teas,
Present.
Catherine Allen,
Present.
John Bingaman, present. Kelly O'Donnell,
Present.
Alan Sanchez, Bert Sumner. We have 6, which is 1.
Okay, thank you. So we can officially have the meeting called to order. And I would ask then for a motion to approve the agenda, assuming we have all read the agenda.
So moved.
Thank you, Mr. Bingaman. Do I have a second?
Second.
Okay, thank you. We have a motion and a second. All those in favor of the agenda as presented, say aye. Or do we have to do a roll call? It's been so long, ladies and gentlemen.
You don't have to do a roll.
Madam,
Even more than I did before I got in here. All right, off to an affirmation vote, or if you're not gonna affirm, we'll get to you in the nays. All those in favor say aye. Aye.
Aye.
Any opposed to the agenda as presented? All right, motion carries. We now have an approved agenda. Third thing on the opening matters is going to be for a motion to approve the August State Investment Council meetings, which have been presented in advance. Do I have a motion to approve the minutes?
Motion here.
Wonderful. Thank you, Member Bingaman. Do we have a second?
second.
All right, I think that's Member Allen. We have a motion to approve and a second. We have any discussion on the minutes? Hearing none, I'll call for a vote. All those in favor say aye. Aye.
Aye.
Any opposed? All right, the motion carries. The minutes from the August meeting are now approved. And we're gonna go to the second item on the agenda, which are reports. So we'll go to John Clark.
Thank you, Governor, and members of the council. Just want to let everyone know that Vince, our CIO, is recovering from a surgery that he had last week and can't join us today. So please join me in wishing him a speedy recovery, and we can skip the next item, 2B CIO briefing on the agenda. I would like to welcome 2 new people to our team. We have Ryan Trujillo over here. Please wave your hand. He's our new executive assistant, and Molly Callahan. She is our new communications, public affairs, and marketing manager. So welcome you both to the team. We recently started discussion with legislative leadership about our budget request to increase staffing. As you know, that's been a strong focus for the council and for the internal team. We've had remarkable support from legislative leadership to this point, and the feedback has primarily been, how can we staff up faster? So as part of this, we're modeling what staffing pacing could look like on a quarter by quarter basis. And we plan to get back to the executive branch and legislative leadership with what that could potentially look like. Last week, I spoke at a Building Advanced Energy Ecosystem. This is a relatively new annual conference. I was a panelist, got great attendance. It was ended up being standing room only, and got lots of great feedback and questions afterwards. I would like to read a very brief LinkedIn post by someone who attended the conference. He's an entrepreneur out of California with about 20,000 followers. The title of the post is "The Surprising Place Betting Big on Fusion, Quantum, and Clean Energy." I just spent a few days in Albuquerque and was pleasantly surprised. New Mexico feels like the Dubai of America before Dubai was built. The state is small, only 2.2 million people, but has huge oil reserves. Instead of spending that money, leaders are saving and investing it. The New Mexico State Investment Council runs a rapidly growing $60 billion fund. They are putting it into the future: fusion, quantum computing, wind, solar, and geothermal. This is rare. Most states would spend the money, but New Mexico is disciplined. Like Dubai, New Mexico has money, leadership, and ambition. What it lacks is a big startup community. But with Sandia National Laboratories and Los Alamos National Laboratory, and new VC firms like Up Abundance, Dangerous Ventures, and Roadrunner Venture Studios, that is starting to change. I went to the Advanced Energy Ecosystem Conference with low expectations. I left excited. New Mexico has a plan. Smart leadership with bold goals. I'm rooting for them to pull this off. Just want to mention that it seemed like that was very much in line with a lot of the feedback that I received at the conference, that people are excited about New Mexico and see a level of momentum here that we've never had. I will also be moderating a panel discussion about venture capital tomorrow at the Governor's Annual Economic Development Conference. This is a conference that always draws a large crowd, and I'm looking forward to that. So, Governor, members, I'm happy to answer any questions, or we could move to the next item, performance report.
Are there any questions or comments? I might do one. Well, John, thank you for being on the panel. This Friday, Pacific Fusion is having a press conference with any number of announcements. There are more folks in the mix already, whether that creates the startup ecosystem, but clearly the role of the SIC and the work that you all have been doing over the past year is remarkable, and it is really beginning to turn the tide. And I want to just thank everyone for leaning in and for these really smart foundational investments, because we set the stage, and this is exactly how you grow a diverse or a diversified economy. You tell the rest of the world that you're going to beat them at it, and then you do it. New Mexico is the only place in America where you can get a quantum engineering degree. And nobody knows that, so you should tell everyone now that I've told you. We're really excited, and I did want to, part of being here today was to let you know that all of the national economic work, people are talking about the role of the SIC here and trying to model or mirror that in some context. They don't have the same investment fund, so they have a different investment strategy. But people are looking to your leadership, and I am very grateful, and it's a source of real pride for the state. So thank you very much, and more to come, I am sure.
Thank you, Governor.
You're welcome. All right, we are on investment matters, number 3. And we're going to hear from the investment committees, and I believe that will be presented by Member John Boone.
And I think we did skip over our performance report.
I've got it marked off on one and then not marked off on another. All right, then let's go to the performance report. Thank you for helping me.
Thank you, Governor. It's great to see you. Morning, everybody. We do have your July performance flash. It's a preliminary report. We haven't had all the private market investments, of course, given the timing when it's an intra quarter and period. But we did want to present that, and I think it starts on page 21. Can pull that up on the screen, perhaps, or maybe folks online can see that. But overall, July was another good month. We had a number of stock indices hitting record highs. In fact, that the NASDAQ, which of course is a tech-focused index, continued to break new records there, and we saw that on a number of occasions, and many of those trends have continued into August and September as well. The leadership in terms of which stocks are driving the markets continue to be relatively concentrated. It's been helpful on the aggregate, but I think, as we talked about, we'd like to see broader performance across the stocks to indicate that we were seeing a healthy economy across sectors and across industries, not just in the tech space. Corporate earnings have been reasonably strong. Most of the companies, about 80% or so, that reported earnings this quarter beat expectations. So that was a favorable sign, and in large part a driver of performance that we've seen. So these gains were realized across really most of the publicly traded stocks. The one area that was struggling a little bit, unlike most of the year, was actually developed non-US equities. Most of that performance, though, was driven by currency movement, not so much by the underlying performance of the stocks. And we've seen this year in particular, currency making a meaningful difference in terms of performance. In some cases, doubling performance, and in other markets, halving performance, just because of the magnitude of the currency movement that we've seen. The dollar, of course, has softened, for most of this year. Again, July was a little bit of an outlier, and that has been a tailwind for our non-US exposure. So the diversified approach, and we talked about that you have across the public equity portfolio structure has been quite accretive overall. The economy continues to grow. When we look at GDP expectations, as well as results, they've been reasonably resilient. Most of that has been driven by consumer spending. You know, that's a significant part, 2/3 of GDP in the US. Although again, I would caution that while that would be indicative of a strong consumer, it's a little bit bifurcated. Those with high incomes tend to spend and continue to spend, but of course we know that those that are on the other end of the income spectrum are struggling in this economy, with inflation still being relatively high, and the Fed, of course, is looking at that quite closely, trying to balance both unemployment and inflation. The Fed dual mandate in July, they met, largely expected that they wouldn't move on rates. They didn't, but then again, they met just last week, and at that point, moved things down a quarter point. So and you're starting to see some disagreement even within the members of the board, and so to be determined what future Fed policy looks like. Clearly, a lot of eyes and lots of implications in terms of the market. One of the more immediate outcomes of lower short-term rates, of course, is that there's higher reinvestment risk for cash and shorter-term investments. So that means that you're obviously earning less income on those shorter-term fixed income instruments. And so when you're holding cash and rates come down, there's a little bit of an opportunity cost there. Fortunately, at present, you still have yields that are higher than inflation, so you're not eroding your purchasing power. There's not an immediate need to redeploy cash that's coming in, and it's been a nice windfall to have all these contributions into the funds. But that's just something to keep in mind. I think I'm foreshadowing a bit that if we saw rates move meaningfully below inflation, that we would need to make sure that is right sized in a expeditious fashion. So with that, I'm happy to take any questions. Otherwise, Marshall will provide you a few highlights on the funds themselves.
Thank you. Are there any questions or comments? All right, proceed.
So first, nice to see you again. Glad to be here. I want to acknowledge Nino and Don and Joel, we continue to work on the monthly and quarterly reports that we provide. Nino was unable, I think he's joining us, but unable, but we wanted to also say that we're meeting every other week, unless we get a call and we need to work on something to continue to improve these reports. So going to page 24, Matthias said this is a kind of a preliminary report because we don't have numbers for the privates, so I'll be very brief, but the rearrangement of the report on page 24, we look at the asset allocation for each of the funds. They are organized from largest to smallest amount of assets, and there are only 3 of the funds that have interim targets. Now your staff is working very hard to get the cash deployed into the private investments. So therefore, on page 24, the only 3 funds, the 3 largest funds that have an interim target, but you are moving towards your long-term target allocation. With that said, I'm going to move forward to page, let's see, so about that page 28, and again, this is a listing by fund, again, starting with the total and then to the largest to the smallest amount of assets by fund. Just want to acknowledge here that contributions, and this is on a calendar year to date basis, contributions coming into the total fund was over 1.8 billion. Distributions in total was over 1.7. So you can see that the net cash flow is still positive, and a strong gain of 4.5 in total. So at the end of July, you were at $63.5 billion. Let's go now to page just ever so briefly on page 13, and I'll just show we're just gonna show performance here for the two largest funds. Month to date, you are positive that you underperformed your benchmark. Calendar year to date, in total for the total fund, 6.6% return. For the land grant, that was just under 6.7 on a net of fees basis. Again, on a calendar year to date basis, slightly underperforming your interim policy index. You can see the other time periods very close to your benchmark, if not outperforming the benchmark. Severance, a little bit different story, not doing quite as well for the reasons we know. We then show the composites, asset class composites, again on this page, looking at the public performance for your asset class composites, US equity, non-US equity, public fixed income and cash. Again, some underperformance on US equity that Greg and Ryan have talked to. You're making changes to your US portfolio. It was very driven by passive investments on the large cap side, and there's going to be some added active management to that portfolio over time. Again, if we go to the next page, that's the privates, and you'll see zeros for the interim month quarters. We are unable to report performance. So positive return for the month of July, pretty strong return on a calendar year to date basis.
Any questions? Comments? Hearing none, thank you very much.
Thank you.
All right. Now we go to the first report, and that is member jumping in, and thank you.
And Chair, Governor, thank you very much. We had a meeting of the Council Investment Committee last week. We did have a quorum with Member Tejas and advisory members Ulrich and Roman attending the meeting. The committee reviewed and unanimously agreed to recommend each of the investment voting items that the council is reviewing today.
Let's get here.
You're also well behaved.
All right. Thank you, Governor, members of the council. There's a couple of different ways I can start off here. Want to just introduce everybody that's up here with me. First off, my name is Tom Lofton, head of public and private debt market investing here at SIC. To my far left is Evan Morey with Airmark Partners. Evan has spent literally the past 3 years trying to get his foot in the door at SIC. We finally found a strategy that matches us. Rob Brown to his right that will be heading this strategy, and then Karen Meany, a co-founder for Airmark Partners. And then to my right is Scott Maynard. He's our real estate consultant with Makita. He supports us on the real estate side. And then online is Mary Bates, also from Makita. Staff in consultation with Makita recommends a commitment, or is recommending a commitment of up to 150 million to Aeromark. This commitment is going to be targeted to be allocated across two sleeves. One sleeve, 100 million to the Aeromark Commercial Real Estate Structured Finance Main Fund 2. And then the second sleeve to a focus strategy investing in commercial real estate structured debt. And we had two questions at our credit committee. One by member Bingaman, and the other by member Tejas, who I think is joining us online today. So first off, member Tejas was a little thrown off by the fact that this is a real estate strategy. We have a head of real estate, Keith Sable. What am I doing? Bringing real estate. So first off, we're making loans. So the loans in this strategy happen to be backed by real estate. So that's why this is being brought as a real estate debt strategy.
Secondly, you know, private credit in particular, tends to be a game of scale in this day and age. So many of the strategies, the larger you are, the better your economics is that it's a contractual type of investment, so it just lends itself to larger scale. But every now and then you find a manager that is actually in the debt world that has found a niche for itself. And it's pretty exciting that to be able to have discovered, or I say, well, I guess more or less it's always discovered, this really good niche that Aramark has created for itself with its relationships with the insurance industry. And member Bingaman asked during the Q&A at the credit committee, why would the insurers want to be entering into these types of loans? What's in it for them, so to speak, and then kind of what's in it for us? So, Mr. Brown, I'm going to ask you when you're just speaking to Aramark to just quickly talk about that, because I think it's a great part of the story. With that said, I'm gonna turn everything over to Scott here to talk about Aramark and talk about the strategy.
Yeah, I'll make a couple of marks about the strategy and then kind of some of our diligence findings. So Aramark established its real estate credit platform in 2019, and it's led by Rob Brown, and the team has grown to over 20 professionals today. The strategy Fund 2, which under consideration today, is a continuation of Fund 1, and that's looking to build out a diversified real estate portfolio across property types and across investments that are primarily cash flowing, value add real estate opportunities across the US in growing and liquid markets. There's two primary sub-strategies here. The first is the origination of B notes. This is where Aramark goes and originates a whole loan, normally up to about 65% loan to value. They will retain the first loss position, commonly known as the B note, and placing the A note with the insurance companies. The second one is structured investments, and this is things such as preferred equity. The fund has a target return of 12 to 14 net this IRR and an equity multiple of 1.5 times. Just a couple of comments on the terms that New Mexico SIC has been able to negotiate here. It includes a lower management fee, higher preferred return, and reduced carry, all very favorable to New Mexico. So onto some of our due diligence findings. I'll start with a couple of strengths and round out with some considerations. So very strong alignment between the GP and LP here. Aramark as a GP is putting up 1% of commitments, and then the team and employees are expected to put up to 3%. We expect 3%, which is a total of 4% of GP commitment, far exceeding the traditional industry standard of 1 to 2%. Further, the team has the ability to receive up to 6% of any carry generated, so further aligning interests with the performance of the fund. The second trade I just want to highlight is the programmatic relationships with insurance companies. This is perhaps Aramark's largest competitive advantage, and it provides a number of benefits such as flexible back leverage options and enhanced deal flow. Just moving on to a few considerations. So it is a newer team, just over 20 people built out since 2019. The average tenure at Aramark is only 4 years. But I think it's important to remember that a lot of these people that work there have known each other previously and also worked together previously, so they have a longer history with each other. And then we view Rob as a key person to the strategy, and appropriately he is named to the key person provision. He's also a principal at the firm today and has a pathway to becoming partner in the near term, which will further align him with Aramark. The last consideration before turning it over to Aramark is the B note program's dependency on insurance companies' appetite for the A note. And I think the mitigating factors here is just looking at the appetite year over year for the insurance companies has been growing, and the number of insurance companies that Aramark works with have been growing as well. So the program just seems to be growing bigger and bigger. So with that, I'll turn it over to Aramark.
Well, good morning.
Good morning.
It's a pleasure to be here, honored to be here, actually. And I'll just spend a moment and talk a little bit about Aramark, the firm, before turning over to the real estate strategy specifically. My name is Karen Reedy. I'm one of the original partners of Aramark. And, we started the firm with the goal of being a very client-centric, enduring firm. And we've grown to now 103 employees and almost 18 billion under management, with consistent focus on a risk first, fundamentally driven and analytical approach to more niche, less efficient markets, primarily in private credit. We pride ourselves on being a solutions provider for our clients, and we think that's evidenced by the fact that 2/3 of our accounts have been with us for 7 years or more. We're 100% employee owned with 8 partners and 9 principals. We're headquartered in Denver, so not too far away, and that's where the majority of our 43 investment professionals sit. I forgot to ask you to turn to page 3 of our presentation. Apologize. Some of these fun facts are there,
And I forgot to just want to say what page, so the presentation itself, where it starts on page 52. And then I believe starts on
121.
page 121. Apologies for that.
There you go.
Yeah, back a couple. There we go. So I've hit on most of the points here. I think I left off with the fact that we are in Denver, very close by, and we have the majority of our 43 investment folks are seated there. And we also have presence in London and New York. So with that, I'm happy to take any questions about the firm, but if not, I'll turn things over to Rob and he can speak about the team and the implementation of Fund 2.
Great. Shoot a couple slides forward. Keep going, one more. There we go. This is a good one. It's great to be here. Thank you guys. And before I start, working with both Tom and Scott, it's been a real pleasure, and look forward to this being hopefully a very long-term relationship. But as I mentioned, Rob Brown, I lead the real estate business at Aramark. I joined in 2019 to really help launch and build out the real estate structured finance business. We've been very busy. We've deployed over $3 billion, over 260 transactions in a fairly volatile and ever-changing commercial real estate environment. We launched our first fund in 2024. We're obviously here to talk about Fund 2. We are a debt and structured finance capital provider on commercial real estate assets nationwide. We also target all asset classes. So that includes multifamily, industrial, retail, office, but it also includes what we consider specialty asset classes like self-storage or student housing, hospitality, even medical office. So it's a fairly diverse both geographically as well as asset class. The commercial real estate team consists of 24 people, primarily based in Denver. We cover the nation from our Denver office. Slightly biased towards the western states, given our location, but we tend to be on planes a lot to make sure that we're seeing these assets. The fund strategy, as was previously mentioned, is really anchored by a first mortgage lending program where we have programmatic partnerships with a stable of insurance companies. We go out and originate these commercial mortgage loans and then bifurcate those positions into a senior A position, which the insurers book directly on their balance sheets. And the B notes that were mentioned are the first loss capital in these commercial mortgages that get capitalized through their fund vehicles. As mentioned, we're typically lending, our average loan ranges kind of in that $10 to $40 million check size. And we typically sit at between kind of 60 and 65% loan to value. In addition to the B note instruments, we also have the ability to provide other structured finance solutions, whether that be mezzanine, preferred equity, or other kind of special situation or event driven instruments. So I'll pause there to see if there's any questions.
Any questions from the members?
Governor, I do.
Okay,
Good morning, everyone. Treasurer Montoya, and I will save you from seeing me because I'm sick, but I didn't hear Mr. Brown's full presentation on the B note. And Tom, if you could just give me a perspective on the B note portion, especially as it relates to multifamily, and that if there's any operational risk involved as far as people being upset about us being invested in this.
I'm unsure how there would be potentially people that would be upset by our helping to make loans or helping to fund loans to build multifamily. As far as the the A and the B note per se, so the insurers they're under risk weighted capital restraints just like many of our banks are, and so this for the insurers that want to make a strong commitment or have historically made a strong commitment to commercial real estate as far as their whole asset portfolio. One of the things we didn't, may I mention some of the insured names or? Sure. Yeah, so one of the things that impressed me about this strategy is the insurer names that Aramark has built a relationship are historically some of the stronger names in the insurance sector in commercial real estate. Pac Life, Protective Life, the Standard. Those are names that have really built themselves over a long time, and they are names that Aramark has established a good relationship with. So why would the insurer want these notes? It gives them, if they're in the senior position, it gives them a little lower risk weighting allocation, or that they had to take away for their a pool of risk, and they have to carve out and set aside a certain amount of risk for each investment that they own. This allows them to manage that. And then there's an interim piece that we're going to be investing in. And in the whole thing about the interim piece, there's really two things that I was looking for. One, are we getting paid enough? And the yields on these interim pieces are very good. And then secondly, who controls the whole transaction? And we made a point that our B note exposure will control or will have control of the transaction. So the building can't be taken out from under us. It can't be, somebody can't come in and take control of it or anything like that without the B note's approval. So those are two keystones for me from the standpoint. And then overall, the 65% or less loan to value. These loans, they're not 80-90% loan to value. They're not an overextending of the borrower's ability. These are you're gonna need quite a bit of the underlying equity holder or the owner of the building is going to have to take a fairly significant write down before it even starts to hit us. So when you look at the risk adjusted returns for us, I think it works out really well. I think Nikita agreed, and Rob, you can probably say that much more eloquently than I can, but that really got to the core of it for me.
I think that reassures me a lot. Thank you. Appreciate it. Thank you, Governor.
certainly. Thank you, State Treasurer. Any other questions or comments? Okay,
I have a motion. Based on the recommendations of the Council Investment Committee, Advisor Makita, SIC staff, and General Fiduciary Oversight from RBK, I move that the State Investment Council approve a commitment of up to $150 million to Aramark Commercial Real Estate Debt Fund, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
do we have a second?
Second the motion.
Thank you, State Treasurer. We have a motion to approve the commitment by Aramark and for Aramark, and a second by the member State Treasurer. Do we have any discussion on the motion? All right, let's have a roll call vote.
Michelle Grisham.
Yes.
Treasurer Lauren Montoya,
Yes.
Nick Teas,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Ellie O'Donnell.
Yes.
That's 6 in the affirmative, motion passes.
All right, congratulations, thank you.
Yeah.
All right.
Thank you.
Switching presentations. So for folks watching, they're bringing in the 3C Partners Infrastructure Fund. We'll hear from them. Don, do you want to say anything else about that? All right. I have a full cup of coffee on. I'm rolling. That's one of the most important things, I assure you. All right, well, good morning, proceed.
Thank you, Governor. My name is Keith Sable. I'm the Director of Real Estate and Real Assets. I have with me this morning, my immediate right for G. Assange, consultant from Mercer, and then representatives from the GP Partners Group. We have Ed Diffendahl, who heads up or co-heads the infrastructure strategy. Irene, I apologize for the pronunciation.
I'm so glad you had to do that.
Out of business development, and this one's the layup, Kyle Osborne. So we're here to recommend a commitment of $500 million with partners in the Partners Group and Direct Infrastructure Fund, or that'll be split between a $350 million commitment to the main fund and $150 million in a co-investment vehicle. In terms of the Partners Group, they were founded in 1997 in Switzerland, currently managing 135 plus billion Swiss francs, a very large platform. They're managing over $20 billion in private infrastructure. A couple of noteworthy points that I would call out here, and we highlighted these also in the SIC meeting. At the last SIC meeting, we went over commitments of $2 billion for the year in infrastructure. We view that as a flexible target to keep us on track in terms of pacing, but where compelling opportunities do exist, we seek to improve our pacing, and to that extent, we're going to be making this commitment as a down payment basically on 2026. The investment with Partners Group will be a continuation of our mid-market value-added strategy focus. Partners Group is a global platform. This strategy will emphasize developed markets, North America and Europe predominantly, with some as well in Asia and other parts of the globe. They're supported by a 100-person investment management team and a 150-person value creation infrastructure that's designed to create value from a hands-on operational perspective within portfolio companies. One thing that you will notice with this commitment, total size of $500 million, it's relatively large for the way that our book has historically been built. I would make two comments related to that. One is that we view risk both from the standpoint of concentration within individual GPs through that lens, and this capital is fully called over the less than 1% of the SIC's overall portfolio. And then the second way of viewing risk would be from a line item perspective. This portfolio will be expected to have significantly more line items than most of the managers that we've recently brought. And so on a commitment per underlying investment, it'll be in the same neighborhood as most of the managers in the overall portfolio. One other point that I wanted to highlight real briefly is I'm very appreciative of the work that Kyle and the team at Partners have done to help us blend right mix co-invest and main fund to meet our portfolio construction objectives, and we've done that at a very compelling fee structure. With that, I'll hand off to Virginia.
Thank you, Governor, council members. So as Keith mentioned, we're here with Partners Group. We're raising Direct Infrastructure Fund 4. targeting $7 billion. From a portfolio construction perspective, as Keith mentioned, there'll be a lot of line items. We're expecting roughly 25 investments. The average investment will be between 300 million and 700 million. And from a portfolio, from a geographic mix, roughly say 40 to 50% Europe, 40 to 50% US, and then North America, and the remainder in rest of world and Asia. Again, what we really liked about them was it's a really back to basics infrastructure play, long-term contracted cash flows, and stable market share, high barriers to entry, exactly what we like to see. And the three mega trends that they'll be driving on are decarbonization and sustainability, so think clean energy, new living, so adapting to the way we all live now with social infrastructure, critical supply chains, and lastly, just digitization and automation for data centers and whatnot. As Keith mentioned, over 100 investment professionals across offices globally. And as they are a value add manager, value creation is extremely important. So we like to see how they build that. And they look at it from two ways. Number one, platform building, buying an investment and then building around it with accretive M&A transactions, but also operational improvements, improving the top line, improving margins, optimizing CapEx. The firm has a very strong track record. The prior two funds have done extremely well, and Fund 4 is a continuation of the exact same strategy. And again, the firm has a low loss ratio, which is extremely critical in any infrastructure investment. So ultimately, we are recommending a commitment of up to $350 million to the fund, along with a $150 million commitment to a no fee, no carry co-investment sidecar. With that, I'll hand it off to Kyle Osborne from Partners Group.
Excellent. Thank you, Keith, and thank you, Eugene, and most importantly, thank you all for having us today. Very grateful and thankful and humbled to be here. I was actually reminiscing this morning. I actually grew up just a few hours north of Santa Fe, so good to be back to beautiful New Mexico. And guess life comes full circle sometimes. But as Keith mentioned, my name is Kyle Osborne. I've been with Partners Group for about 9 years. I lead our West Coast Client Solutions business, and very happy to be joined by Irene and Ed today. I will be very brief. I'm not going to flip slides, but just wanted to mention, at a high level, Partners Group as a firm has been investing in private markets for almost 30 years. And today we have about 1,800 employees across 23 offices globally. So to Gurjeet's point, a global value add strategy, I'd like to think we're fairly well placed. Number one being truly global across all of our offices, but also very well resourced as a firm, also on the operations side and the investment team. So with that, unless there's any questions at the top, I'd like to turn over to Irene to touch on our infrastructure team specifically. And then we're going to pass to Ed to walk through the strategy, the opportunity, and the existing portfolio. But thank you again for having us.
Sure, I'll pause to make sure. Any questions by any of the members? All right, looks like we're good to go.
Thank you. Morning, pleasure to be here. Picking up on the team, as mentioned by Keith, Gurjeet, and Kyle, we have a team of 110 plus professionals. That includes a dedicated asset management team of 13 seasoned industrial operators. Kyle mentioned we're global but local, global footprint, but we staff our offices with local personnel who are an understanding of the local markets. And our team is globally led by Esther Piner and works together with our management companies portfolio, or the portfolio companies of the management teams of our portfolio companies, as well as the operating director network, to create the value that we bring to the table for our asset transformation funds.
So just a few things on the strategy. I'll highlight 4 points. I'll be very brief. The first is just to double click a bit on what Keith was describing as our thematic approach. So we have 3 broad thematics, which we think offer great risk return in the infrastructure sector and meaningful overall tailwinds. So it's decarbonization, sustainability, a lot of renewable power, as well as circular value chain, renewable natural gas, etc. We actually own over 100 megawatts of solar here in New Mexico through our Texas platform. So it's a theme that we have a ton of conviction around globally. We have what we call New Living, which is code for our social and education related infrastructure and healthcare infrastructure, as well as transportation, logistics, and electric vehicles. And then finally, digital. It's hard to open the Wall Street Journal today and not see an article about AI or cloud computing. And we own 4 platforms globally, 3 in Fund 4, one that I'm involved with called EdgeCore,
which is a hyperscale focused platform. I also wanted to just touch a bit on our approach to underwriting. As Kajit said, we have very low loss rate. We approach our investment underwriting really starting with principal protection. It's almost a debt-like lens to ensure that our assets have long-term contracts, stable cash flows, great credit quality counterparties. And then we stack value creation on top of that principal protection case, either in the platform building context or in the operational value creation context. In Fund 3, we did have very diversified funds, 22 names, about 40% in that decarbonization thematic, about 30 in Living and 30 in our digital strategy. And I would anticipate Fund 4 is very similar to that. It's same team, same thematics, same strategy, building a diversified, really well risk-adjusted portfolio for investors. And finally, we're well on our way to Fund 4. There are 9 names already, so we have a seed portfolio, the earlier of which, like EdgeCore, have already been written up a bit. So it almost has a secondaries like sort of lens to it, where you kind of know what you're going to get in Fund 4, and some of the names that are already in Fund, like global diversified way are already there. So happy to answer any questions. I think it's a thematic strategy that we've been investing in for a long time, and we'd love to have you do this.
All right, thank you for your presentation, and I'm gonna see if any of the members have any comments or questions.
Governor, I do.
Okay, and that's the state treasurer again.
Good morning. So just so I'm clear on my end, it's 7 billion, 2.5 billion have already been raised, and you're expecting about 20 to 25 overall. In the last fund, those 20 to 25 that invested, was it mostly a mixture of government and private, or can you give me a breakdown of what that looks like as far as, I know he said 40 split between here and Europe, but as far as the type of investors that are in, and what time frame are you expecting to be fully fundraised?
So the type of investors we had was pretty broad spectrum. A lot of public pension plans, global, because we're a global investor, so we also have a global investor base. Some privates, as well as insurance companies were invested alongside us, really because of the appeal with the downside protection.
Thank you, Governor. That's all.
All right, thank you, Madam Treasurer. Any other questions? All right, seeing none, I'll go to Member Bingaman to walk us through the process for approval.
Thank you. Based on the recommendation of the Council Investment Committee, Advisor Mercer, SIC staff, and General Fiduciary Oversight from RBK, I move that the State Investment Council approve a commitment of up to $350 million to Partners Infrastructure Fund 4 LP, and also up to $150 million in a co-investment vehicle, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second, Nick.
Oh, that was Nick. Member Tejas, thank you. So we've got a motion to approve and a second. Do we have any further discussion or questions on the motion? Hearing none, we'll go to a roll call vote.
Governor Michelle Lujan Grisham,
Yes.
Treasurer Laura Montoya,
Yes.
Nick Tejas,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell.
Yes.
6 in the affirmative, motion passes.
All right, congratulations. Thank you very much.
Thank you.
Thank you all.
All right, we'll move to the infrastructure. Tierra Adentro Fund, the Mexico Strategic Venture Capital.
Sounds good.
Morning.
So this is an investment we're proposing for the Strategic Venture Capital Program. So recommendation to commit 100 million to a new platform called J2 Infrastructure, which is being built out by one of our existing venture managers called J2 Ventures. We actually made our second commitment to the venture platform last month. And this is a new really kind of just for a new part of the program, which we recommended that was created earlier in the year. The strategy of the program at a high level has three prongs. It's a very deliberate sector focus, where we think New Mexico has a right to win. And thankfully, we're beginning to see some of that, come to fruition in terms of particularly advanced energy with geothermal and knock on wood fusion this week, as well as things like quantum. So we call those, we make traditional fund commitments as part of that, and we just call those fund commitments. The second part of the strategy, which we've been building out, is, building the scaffolding for the ecosystem. That's venture studios, accelerators, incubators that not only work with, local companies and scientists on the ground, but also act as an evangelist for the state to bring companies from elsewhere to have operations here. So groups like Roadrunner, Antler, Abundance are examples of that. The third thing that we've been wondering about is so those are effectively creating the investment pipeline for the state for all intents and purposes. The third thing, which we call strategic structured investments, that we contemplated is how do we support companies when they make that decision to actually, put the shovel in the ground and build in the state. And venture is one mechanism of financing things, but there's other forms of financing that can be very instrumental in helping a company make that decision to do it here. And so with J2, we were beginning to think about, what kind of other types of financing should this program have to, make that decision for companies easier if they're deciding to build here. And so we came up with this idea of helping them, us anchoring a new platform called J2 Infrastructure, which is really we're calling it growth infrastructure, which is really companies that are venture backed. They're usually raising both venture capital, but as well as other sorts of financing. And we think they're a flexible infrastructure that can be an accelerant to helping companies decide to build in the state. I'll pass it along to Richard Pugmire for Richard.
Thank you, Chris. Thank you, Madam Governor. J2 Ventures is an existing relationship in the Strategic Venture Capital Program where $49.5 million has been previously committed. We approved $35 million just last month to their venture capital fund, J2 Brookhaven Fund. And we spoke last month about how this team has really embraced New Mexico over the last few years that they've been a part of the program. They have 3 New Mexico related companies in the portfolio. They're opening an office in New Mexico. And as part of their sourcing efforts in the state, they've really seen an opportunity to start a growth infrastructure platform targeting New Mexico related investments that are complementary to a lot of these strategic areas that we're focusing on in the program. These include things like quantum computing, data centers, telecommunications, and energy investments. J2 founders, managing partners, Alex Harstrick and Jonathan Bronson, recruited Alok Cinder to the firm to oversee this fund, with plans to build out the team by adding additional investment professionals. Mr. Cinder has previous experience leading infrastructure at Fifth Wall Ventures and was a founding member of the infrastructure team at D.E. Shaw, where he worked with Jonathan Bronson on infrastructure investments. Since this is a new fund, we focused a lot of our performance analysis on Mr. Cinder's previous investments. He helped start 2 other infrastructure investment platforms and has invested over $2 billion of equity. The performance from these firms has been strong. These investments have been strong with the realized investments in the target range of what this fund is targeting. Now, this fund is expected to invest in 2 to 3 infrastructure investments with assets in New Mexico, which is expected to bring more in-state manufacturing and job growth. This is a growth infrastructure strategy, so these investments are expected to start generating cash flows within 12 months. The firm will likely have a minority equity or debt investment in these investments, but they do expect to have a voting role on the board. This is a concentrated portfolio with a large focus on New Mexico. However, the team's going to focus on structuring these investments to help manage the downside risk. Things like structuring with milestones for further investments or to unlock additional investments, and then also looking at the cash yield as well. The SIC is expected to be the largest and potentially only investor in this fund, and we've negotiated preferred economics as part of that. There's also a single key person protection against the departure of Alok Cinder as well, given his importance to the strategy. So we're recommending $100 million commitment to this fund. I'll turn it over to the J2 team for a presentation, and then we're happy to answer any questions.
Thank you very much, Richard. Thank you, Chris. Madam Governor, it's great to see you. You may not remember us, but in our second fund, you were also in that meeting, and it went extremely well.
Good ones.
Yes, there's something nice about being in the Super Bowl. You know,
It rarely happens, so it's a good luck measure, but I'll take it.
I'm a little bummed that Treasurer Montoya can't be here with us, because I love the roasting from her, and I'm very much prepared for the questions if and when they come.
Oh, I'm sure you'll get that.
Not goading. I'm just, we're ready for it. There's been a lot of prep that's gone into this. So, anyway, it's really wonderful to see everyone again. I think we're so familiar to the security staff at this point that they just kind of wave us through. They did their job, but we're very familiar. And everyone watching at home, great to see you. We spent a lot of time in the state, Madam Governor, esteemed members of the council. In essence, there are three problems that we're all trying to solve. There are really three problems. We want to make jobs in New Mexico. We want to make the next generation of cool stuff in New Mexico. And we want to achieve above market returns while we're doing it. I'm sure there's nuance in that, but in essence, that is the platform. This fund is purpose built to achieve all of those things. The builds can only happen in New Mexico with companies that will be committed to creating jobs in New Mexico, leveraging the existing incentives from the Economic Development Authority of New Mexico. The Tierra Dentro Fund is actually named after what I believe was the first infrastructure built in New Mexico, connecting Old Mexico and with a road all the way to the San Juan Pueblo. It is named after possibly the most influential infrastructure build in New Mexico. And in our pursuit of that, we hired the Kobe Bryant of infrastructure. I'm kind of glad the other infrastructure teams aren't here because they'll try and recruit a look away from us, hence the key man provision. But you cannot find somebody better to be able to lead this effort in New Mexico. And back to the points that we made earlier last month, we are unapologetically dedicated to the state of New Mexico. So this is not a build for Colorado or Arizona. We fudged it. Hey, I'm sorry, I'm a local boy, but I'm actually from a neighboring state. This is Santa Fe, Albuquerque, Las Cruces. There is no ambiguity. And so the pursuit of that, yes, there will be some concentration. The fund is relatively small. We actually already had a large family office from New Mexico sign up for the fund. So you will not be the only investor. And the strategy will grow. And it is in a net new modality that is new to venture, but it is better. And a lot of venture capitalists are looking for something like this that will allow them to build in the right places with the right people. That is the purpose of the fund. And in the course of that, we will achieve an above market return. And the only limitation to this strategy will be we just can't keep taking a lot of money from you guys as we continue to kick ass in the future. So I apologize in advance. I'll hand it over to Alok to discuss more nuance.
First of all, excited to be here today. I got my Christmas chili fix last night, so definitely feeling it actually this morning.
That joke was rehearsed, Madam Governor. So
yeah. Look, I built my first project in New Mexico in 2017 in Deming, and that's the first time when I got a sense of there's a tremendous amount of untapped potential in this state. Built my second project in 2022, felt the same. So when the opportunity came to work with the J2 team, John and I, of course, worked together a previous infrastructure platform and focus on these key growth sectors. I'll go over them again in a moment. Richard did highlight them. I thought, look, this is the right state at the right time. We have a macro emphasis on just across the US, more jobs in the US, industrialization, high quality jobs, right? You have a state that's willing and interested in growing. And the key is how are we able to take, for example, in my case, 20 years of expertise, and can I leverage that expertise in helping New Mexico build, create jobs? And that's really the intent of the fund. I think I'm excited. We already have a really robust pipeline, so we've got work to do, and that's the best kind. And the areas of emphasis are, as Richard pointed out, it's quantum, data centers and telecom, as well as energy. And in energy, you know, again, playing to New Mexico's strengths, you're talking not just solar because of the sunshine and geothermal because of the shallow hot rock, but of course the Permian with oil and gas. So there's so many different aspects of New Mexico that we're gonna be able to leverage. And that's the key. These are companies, I think, that are excited to come here. They need the capital, and we mentioned being a venture adjacent strategy, a form of growth infrastructure, leveraging our expertise, the natural strengths of the state, and working with local agencies and state agencies like the EDD. I think we're gonna be able to accomplish great things. So I'm excited to get started.
Anybody else on the presentation side? All right, any questions about the presentation from any of the members? I mean, I feel like we gotta get the treasurer there.
Governor, it's great to see them again. He always brings a lot of energy. If I wasn't sick, I'd have 10 questions, but the only thing that comes to mind right now is just if you can run us through the possibility of over concentration, being that we're putting so much money in one single area in venture is still concerning to me from last month. And so if you can just help me to understand both the overconcentration aspect and the protection and mitigation of that, as well as the idea of like the internal controls and making sure that these things still stay independent.
Yeah, no, that's an excellent question. First of all, with our underwriting, we work very hard to not just protect principal, as was pointed out, it's a debt-like instrument oftentimes, contracted cash flows within 12 months of investment. And so what we look to do is, in terms of diversification, we have three main areas. We do have to write relatively large checks for a $100 million fund because infrastructure just costs money. I mean, we're being realistic. It's typically not a $2 million check that you can use to build a factory. But through the steps of underwriting, through the checks and balances and active investing, such as seats on the board, we're going to be able to mitigate have this downside protection, and hopefully also create some value along the way. The good news is this is something that we've done before as well, so we're not inventing an entirely new model. Frankly, the newest part of this is that it's concentrated in New Mexico. Everything else is something that I've done before.
And just to add to that, I think part of the question was around concentration with J2 specifically. And I'd point out that the investment teams are entirely separate. So there's some synergy in understanding venture and of course some diligencing and understanding how the companies work. But all of the investments will be in separate companies, all of the investment professionals will be separate. The type of risk reward profiles are separate. So on the venture side, we're taking early stage pre-revenue bets on things that we can hope will 100x or 1000x. Right on this side of the table, these are companies that are leading edge at this point, but not leading edge. They already have contracted revenue. They've already built the first version of their factory. Now they need a second or third or a larger one. And so there's a tremendous amount of diversification of how we're approaching building from that perspective.
And thank you. And Governor, one last point, I think that also address the risk aspect. There's an item stating that the three founding members form the investment committee. Collectively, the members have 17 years of experience, 4 years of tenure at J2. Decisions are subject to a consensus. And in addition, additional controls are in place as NMSIC will have a veto right. So can you just talk to us a little bit about that for the record?
Yeah, yes, Madam Treasurer, thank you so much for bringing up that point. In our discussion, and I'm always confused why people are so sensitive to bring this up. New Mexico does have preferred economics as a result of helping this strategy get started. In addition to all of the returns are obviously coming back to the state as a solo GP. But I think a common mistake someone would make in building in New Mexico is taking a very cavalier attitude that with very little time in the state, they know how to build in New Mexico. The reason our meeting yesterday was with the Secretary Black in Economic Development was to have these ongoing discussions. We'll have a monthly standing meeting with him moving forward. In addition to, I'm not sure we're allowed to reach out to yourself, Madam Treasurer, but whomever that the SIC recommends we consult in advance of the build, the worst thing that we could do isn't achieving the three outcomes. Jobs, infrastructure, above market returns, is we do something that will not be in the best interest of people in the long run in one of the pueblos, in one of the cities. This should only be value accretive, and the way that we're value accretive is not only giving the veto right to New Mexico SIC, but in being a very, very good long-term partner to the citizens of New Mexico in our consultation in advance of the builds.
Thank you, Governor. Great to see you all.
And just for you, State Treasurer, I think you were referring, Alexander, to Wingate Pueblo. San Juan is long gone as a inappropriate colonization name, and it was changed decades ago.
My apologies, Madam
There
Governor.
you go, State Treasurer. I got one for you.
I didn't want to have to correct him in front of everyone.
That's why AI's not always right on the ground, my friend.
I'm just as angry at Sam Altman as you are. We're going to San Francisco, so you know. Yes, Sam, if you're watching this.
All right, well, thank you for letting me just remind everyone, that the New Mexico names are hard, but important, but infrastructure in rural, hard to serve areas is also something that the SIC ought to be and is interested in. So thank you very much. Any other questions, concerns? Right, Member Bingaman?
Madam Chair, based on the recommendations of the Council Investment Committee, Advisor Mercer, SIC staff, and general fiduciary oversight from RBK, I move that the State Investment Council approve a commitment of up to $100 million to J2 Infrastructure Tierra Adentro Fund, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Do we have a second?
Second, Nick.
We have a motion to approve the request and a second. I'll go to a roll call of the members for approval.
Governor Michelle Lujan Grisham,
Yes.
Treasurer Laura Montoya,
Yes.
Nick Cass,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell.
Yes.
That's 6 in the affirmative, motion passes.
All right, thank you. Congratulations, and we'll move to the next.
Thank you.
Which is, you're welcome, Bessemer Venture Partners.
So the next two investments are part of our national program. The first investment is a lower middle market growth buyout fund in the software space that was started by one of our venture managers called Bessemer Venture Partners. We're recommending a $75 million commitment that fund, which is their second fund. Bessemer is a very well-known venture capital fund that raises capital at the early stage, mid stage, as well as they have an India fund, which is how we started the relationship earlier this year with a $40 million commitment. I'll pass along to Richard for discuss the due diligence.
Chris, thank you, Madam Governor. Bessemer is an existing manager in the national program, so we switched program. This is the national private equity program that we're talking about now. And the only fund we have previously with Bessemer is the India fund, although we are looking at other funds and growing this relationship as funds come to the market. Bessemer does have 4 strategies total. They have their flagship venture capital fund, the Century funds, which focus on mid to late stage venture capital investments, the India focus fund, and then also Forge, which we're talking about today, which really focuses on lower and middle market growth and buyout companies that are sourced through the firm. Bessemer is one of the longer standing venture capital firms out there. It started operating independently in 1981. The fund is led by 2 experienced partners who average over 20 years of experience and has 19 dedicated investment professionals just for this fund and 2 operating partners. Before joining Bessemer, the 2 partners, Robert Eady was the co-head of growth equity and buyouts at Norwest Venture Partners from 2009 to 2021. Naveed Orizi spent 8 years at a middle market growth buyout firm called Sorrent Capital, where he led multiple investments. And the platform has over 60 operating and strategic advisors that the team can utilize, which is important for that post-investment value creation initiatives that are important to private equity. As I mentioned, Forge 2 is focused on growth buyout investments in the software and technology industry. As part of Bessemer's broader strategy, they really focus on thesis-driven investing, where the firm creates investment roadmaps to identify target areas that they want to invest and then utilize their relationship with companies in those areas. Over time, too, the firm's created toolkits to leverage in areas such as marketing, pricing, product development, executive team recruitment to really help these portfolio companies. From a track record perspective, the first Forge fund is tracking above median, which appears to be driven by strong revenue growth within the portfolio. The 2 partners also have a favorable performance track record from their prior funds as well. So we're recommending a $75 million commitment to BVP Forge 2, and the Bessemer team is actually on the Zoom meeting for a short presentation as well.
Thank you, Chris. Thank you, Richard. Richard, you did such a good job. You might have just taken care of it for us. But Madam Governor and esteemed members of the State Investment Council and Board, it's a pleasure to be back, at least virtually, since we presented on India earlier this year. And this time we're here for Forge. My name's Anita. I'm a partner here and head of investor relations and fundraising. I'll be turning it over shortly to Rob Arditi and Navita Razy, the partners who lead the Forge strategy. But I just wanted to provide a quick refresher on Bessemer, though Richard did a very good job, actually. Bessemer traces its origin, as he mentioned, over a century ago as the Phipps family office and spun out completely independently in the early 1980s as one of the earliest technology venture firms. The Phipps family remains an important LP and continues their support across our platform, including with Forge 2. Our Hallmark venture capital funds are currently investing Fund 12 and preparing to raise Fund 13 and our next growth vehicle next year. A key difference in our partnership model in venture is that investment partners allocate capital based on their track records, which drives accountability and performance. Beyond venture and our carved out India venture strategy, we've invested over the years in cash flow positive, self-sustaining software and technology companies. These opportunities didn't always fit the flagship fund. So eventually we launched Forge, a dedicated strategy for growth buyout and significant minority investments, leveraging Bessemer's sourcing and platform advantages and early insights to frontier technology. With that, I will turn it over to Rob Arditi and Navita Razy to share more on Forge.
Hi, everyone. Nice to meet you. I'm Rob Arditi. We started Forge really because we saw a white space in the market. There's a number of private equity firms out there that focus on this lower middle market buyout segment. But by partnering with Bessemer, we can create a platform and experience for management teams that doesn't exist anywhere. There is no other top tier venture capital platform out there with a standalone buyout fund. We were an N of one when we started it this way over 4 years ago, and we're still an N of one today. And what that does is give us preferential access to management teams, to transactions, because they want to be a part of this aspirational Bessemer network that backed companies like LinkedIn and Shopify, and some of you maybe have used Pinterest or Yelp, those sorts of businesses. That sort of connectivity and network is not available in this lower middle market buyout segment. The companies we're targeting are generally in that kind of $10 to $50 million revenue range, but they're already profitable. And we're taking control positions. We're putting seasoned CEOs on the board to help execute transformations that we're underwriting to upfront, whether it be building out a sales engine, re-architecting the marketing strategy, retooling pricing and packaging, up-leveling talent within the organization. And it creates this really nice return curve because the downside is mitigated. These are already cash flow positive businesses. They're going concerns, they're sizable, but in the arc of their overall journey, it's still relatively nascent. So there's a lot of opportunity for strong upside potential. So that's just a little bit of the background on Forge, the inspiration for why we started it and where we focus and our differentiation within the market. So I'll pause there and turn it over to my partner, Naveed.
Thanks, Rob. Really nice to meet everybody virtually. Appreciate the time. Just maybe double clicking for a minute on value creation. As Rob mentioned, we partner with self-sustaining, growing software and software-enabled businesses, but companies that have a lot of opportunity for private equity value creation, where we think that value creation, the way we can deliver it is enhanced by the connectivity of the Bessemer platform. It all starts as an operating partner, as Rob alluded to, ex-CEOs who have sat in the seat, have operated these businesses in this space before, who are now full-time Forge employees. Each one of them spend time with only about 5 companies at a time. So it's a very concerted, focused, on-the-ground approach to define typically 3 to 5 areas of value creation for a company, whether that's sales, whether that's pricing, whether that's acquisitions, whether that's new markets, whether that's leadership team development, and then spend real time with these companies on the ground, helping to effectuate those transitions and changes and the value creation initiatives with equity alignment with each of these companies. So the operating partner is where it all starts. We then wrap around that operating partner a lot of capabilities that we have here at Forge, enhanced by decades of investing that Bessemer has done in some of the most successful technology companies in the world. We can bring that IP, that talent base, that portfolio set of experiences to lower middle market companies in a really unique and differentiated way. We've seen the results of that in our portfolio in Fund 1. We have 9 companies in Fund 1. Each fund for us will have about 10 to 12 investments. We're investing in a pretty methodical, disciplined way to be able to have focused attention and impact in these companies. And we've already seen the fruits of the value creation work accrue in Fund One, with equity value accretion, revenue growth, as was mentioned earlier, and some really great early signs of progress on the value creation work that we've done with these businesses. And then finally, this is all made possible with a Forge team. We have a dedicated team of 18 folks at Bessemer, 100% focused on the Forge business. That team will grow marginally in Fund Two, but we have the team in place now. It's been in place over the course of the past 3 years. That's really in place to help us effectuate the Fund Two strategy. We are going to be growing that team to bring on more operating capabilities in-house. And then I'll end with the philosophy around organizational development at Forge, which mirrors how Bessemer Venture Partners has cultivated talent for decades, which is to bring folks, develop them, invest in their development, give them a path of equal partnership with Rob and I, which is really how this organization operates. How Bessemer has been around for decades and gone through many generational transitions, and we hope to do the same here at Forge in the coming decades. With that, we'll hit pause on just a background, but obviously happy to open it to questions.
Are there any questions from members, comments? Hearing none, proceed. Any more? All right, present, I thought, in any event, we'll go to member Bingaman then to prepare a motion for approval.
Thank you, Madam Governor. Based on the recommendations of the Council Investment Committee, Advisor Mercer, SIC staff, and the General Fiduciary Oversight from RBK, I move that the State Investment Council approve a commitment of up to $75 million to Bessemer Venture Partners Forge Fund 2, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Do we have a second?
Second.
All right, having a second, hearing no comments or further discussion, I go for a roll call vote.
May I just make one comment, Governor?
Yes.
I'm looking at you. Thank you, Governor.
Sure.
Sorry.
You're welcome. I'm sorry. There's a delay between you and me on the screen.
The only comment I would make to you, sir, is that looking at your team and the idea that you're growing it, there's a big disparity of women versus men. And so I would just ask that you reevaluate that as you grow. Thank you.
Thank you, Madam Treasurer. So we like our names all for the record correct, and we are a state that's fully integrated into gender and ethnic and racial diversity. So thank you very much, Madam Treasurer. And with nothing else, let's proceed with the roll call vote.
Governor Michelle Wilhelm Grisham.
Yes.
Treasurer Laura Montoya.
Yes.
Nick Tejas.
Yes.
Catherine Allen.
Yes.
John Bingaman.
Yes.
Kelly O'Donnell.
Yes.
6 in the affirmative, motion passes.
Congratulations and thank you to the SIC. All right, we're on our next presentation from TCG Fund. Go ahead.
Okay, so the Column Group is one of 6 biotech venture capital firms in our program. These groups invest everything from company creation, as in partnering with scientists to help create companies, all the way through pre-IPO and sometimes public securities. So a very diversified portfolio across the biotech landscape. We have an existing relationship with the Column Group and what they call their TCG Labs Fund, which invests in single antibody assets. The funds that we've not invested in yet invest in broader platforms that are capable of producing multiple assets, and so the investment system relate to that part of their platform. We're recommending $30 million to their Fund 6 and $30 million to what they call Opportunity 4. And we committed $100 million across the other 2 TCG Lab funds. Richard, pass it to you.
Thank you, Madam Governor. So we're reviewing 2 Column Group funds today for the national program, and you've seen the Column Group name before with TCG Crossover and TCG Labs previously, and all focused on life science investments in some form. And the funds today, within venture capital that we're talking about are focused on drug discovery companies, primarily located in the US. TCG is led by managing partners Peter Sven-Nielsen and Timothy Kuski, who each have more than 30 years of experience in life sciences. One of the differentiations I think with TCG is they also have a team of scientific experts that provide support. So these include science partners that provide mentorship to portfolio companies and help review new scientific ideas, partners who provide new ideas for startups, and experienced venture partners who can serve as directors on TCG portfolio companies. I think the expertise of the firm is very important to this strategy, which is really building new companies that can be exited via an acquisition or an IPO. The firm works alongside management teams in areas such as designing the company, recruiting the team, developing the clinical plan, obtaining financing, and executing the plan. And also within this industry, there's potential macro tailwind that could benefit this type of investment strategy, with large pharmaceutical companies needing to acquire drugs with strong growth potential to fill in gaps from drugs in their portfolio with expiring patents. At a high level, performance has historically been above median across both of the fund series for the more mature funds, and the more recent funds are still developing. I think one thing to note too with their track record is they've been able to generate this performance with a relatively low loss ratio, especially for an early stage venture capital strategy. They also have a sizable commitment to the fund as well, which provides good alignment. So we're recommending a $30 million commitment to the Column Group 6 and $30 million to TCG Opportunity 4. And I will turn it over to the team from the Column Group who's on the Zoom.
Good morning, Madam Governor. Good morning, New Mexico. This is Peter Sven-Nielsen calling. I'm the founder and managing partner of the Column Group. We are on our 19th year, and this will be our 12th and 13th fund. Both funds are the same size as the previous funds in this category, Fund 5 and Opportunity 3, for $600 million for LPs. We start all of our companies ourselves. We start 3 to 4 companies per year and end up with a portfolio of about 12 companies. And when we started that 19 years ago, some people felt that perhaps we were too concentrated and that was risky and maybe everything would fail. But building companies, your own companies with your own hands, with your own network of scientists, many who have something to do with the original biotech company, the first one in San Francisco, Genentech. When you build these companies, we are very hands-on through the process of getting drugs to patients. And more than half of our companies become successful over time. So in a portfolio of about 12 companies, 6 to 8 are successful companies, and only 4 to 5 are less successful. We get returns on individual investments ranging from 3 to 77x return, and our early stage funds typically get somewhere between a 4 to 6x total fund return. And then the other type of funds that we have are opportunity funds. They invest in the later rounds of financing of the same companies, and they get solid 3, 4, and 5x returns for more than half the fund portfolio. And on average, those funds will end up 3x funds. We've come up with drugs over time for obesity, breast cancer, kidney cancer, other cancers, prostate cancer. We have a treatment for epilepsy that looks like a cure. We have drugs for muscular dystrophy, etc., etc. So our team, we're 3 managing partners. It's me. My background is in finance and strategy. I'm also the founder of the whole constellation of funds. And then we have a scientist, Tim Kuski, who is operational in experience. And then we have a true drug hunter who has developed 5 major blockbuster drugs himself, Jin Long Chen. Then underneath us, we have 6 partners, and they range from operational to scientific evaluation to recruiting and to finance. And then, as was mentioned, we have part-time partners. Some of them have the Nobel Prize in medicine, like Jennifer Doudna that got the Nobel Prize in CRISPR. And they leads us to the most important discoveries in medicine that we then build 3 to 4 companies per year, as I mentioned. We are different in that we have varying experiences in our partners group, and we can't split the pie like many venture funds do between them, and that everyone starts 3 or 4 companies in the partners team. We have to work as a team because we have complementing skills. We sell 80% of
Yeah. Are we working to get that back? Oh, okay.
Yes.
Can we move to anything else while we wait for that phone call back?
I'm always good at filling space.
You're always good at filling space. I remember that. How are you?
Governor?
Very much.
Nice to see you, Senator. I was hoping you would say hello to me.
Well, I don't hear that very often, so I appreciate it. I asked you not to play rugby anymore.
Somebody has to do it.
I'm
sir.
sorry, I was disconnected, so I'll wrap it up on my end. So we have complementing skills amongst our partners, and we have to work together as a team. Another way that we are different is that we, through an old Genentech tradition, we rank all of our companies every quarter, and we tend to double down or even triple down on our winners, and we are more active in pruning our portfolios and pull the plug on the least promising companies that we have started. I mentioned the medicines, and we were very active in cancer in the first 7 years of our fund, and recently we have gone over to also to be very active in neurological disorders, Parkinson's, Alzheimer's, dementia, and also epilepsy, as I mentioned previously.
Thank you.
That's it on my presentation.
Any other part of the presentation? All right, do we have any questions or comments about the presentation itself from any of the members? All right, hearing none, we'll go to Member Bingaman to take us through potential approval.
Madam Chair, based on the recommendations of the Council Investment Committee, Advisor Mercer, SIC staff, and General Fiduciary Oversight from RBK, I move that the State Investment Council approve a commitment of up to $30 million to TCG Fund 6 and up to $30 million to TCG Opportunity Fund 4, subject to and contingent upon New Mexico legal requirements, Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Do we have a second?
Second.
I think that's a second. Who was that?
It was, both Nick and
the treasurer at the same time. Well, you get to pick one. Thank you both for that second. Any questions? Discussion? All right, hearing none, we'll go to a roll call vote, sir.
Governor Michelle Lujan Grisham,
Yes?
Treasurer Laura Montoya,
Yes.
Nick Tejas,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell.
Yes.
That's 6 on the affirmative, motion passed.
Okay.
Thank you.
Thank you.
Thank you, Madam Governor.
You're welcome. Thank you for your presentation, sir.
Thank you.
I have a suggestion from a member. We might want to put all the folks up for the different performance reports. But if it fits with the members' efforts and schedules, what we could do instead of having all the different performance reports is seek to see if there are any comments or questions related to those items that were presented to the full board before this meeting. Do folks have a preference? This is a lively microphone. I don't know what to say about that. I mean, I know we have coffee right over there.
Madam Governor, I think silence is assent.
All right then, we will skip the details of those reports. Hearing no questions or comments, we are on item 4, which would be governance matters, and I'm going to call on the chair of that, Kathy Allen, to give us a report on the governance committee.
Thank you, Governor, and thank you, members of the council. The governance committee has met twice since we had our retreat with Ascension to discuss a number of issues. We, first of all, reviewed the recommendations from Ascension. We've asked for more details from them so we can fully understand them, and we prioritized those. So we gave those back to the staff to come back to us on how they would get our priorities done first and what are low-hanging fruit and what are the timelines on each of those priorities. We also reviewed the charters of the 3 committees, which is an annual responsibility of the governance committee. That's audit, investment, and the governance committee. We in particular were looking for how risk management was covered. We also had a presentation on our risk matrix in risk appetite, and to make sure that the committees are covering those risks. And it's through audit, there's pretty extensive coverage on operational risks, including technology risks. We also reviewed the descriptions in the legislative mandate for the SIC, as well as the investment committee charter qualifications, to look at, are they updated? Is there anything more that we need to add to those qualifications to ensure that we have a very professional council and investment committee, that we have the right kind of people with the right kind of skills in particular around finance and investments. We also looked at how we might recommend both qualifications and potential committee members, council and committee members, to the Legislative Council as well as the governor's office, and we'll come back on that. And in terms of our next steps, we've asked Ascension for more details around the recommendations and the priorities back from the staff. So we'll be discussing that at the next meeting. We also have talked with Charlie Woolman about the right approach in taking additional qualifications, in particular operational experience, risk experience, onto the committees. And again, for the audit committee to perhaps have someone who has a technology risk or operational risk background to sit on that committee, possibly as an advisory role. And we then will look again at how we assign. We've asked to look at how we might assign risks if they're not all covered to each committee. So that's my report. Any questions?
Hearing none, thank you, Member Allen, for your reports, and thank you for your strategic planning. Why don't we go then to item number 5 and have Brent Chip talk to us about our monthly financial reporting.
Sure. Thank you, Governor. I'm on page 498, and just want to point out on item number 3, Baker Tilly is in the process of wrapping up their 4th quarter agreed upon procedure report, and that is supposed to be done by the end of September, and will be forwarding it out to the council after I have that finalized and, I'll get it distributed. And then, other than that, I just wanted to point out that October is a very, busy time in early November, as the, year-end audit heats up, and, we're getting prepared for that. The auditors will be in, probably in a couple, 2-3 weeks, to complete their final procedures, and I'm not anticipating any problems as far as the year-end audit is concerned. Other than that, that's all I have, Governor.
All right, thank you very much. Are there any questions or comments,
Governor, I just have one comment.
Madam Treasurer?
Just as a reminder to everyone, now that the Fed fund rate went down, the state investment council's local government investment pool medium term will probably have some significant lower earnings than what they've had in the past, and just wanted to make sure you took note.
Thank you for sharing that, Treasurer.
Thank you very much. All right, we are now on section 6 of the agenda, which is closing matters. First thing is old and new business. Do we have anyone who, yes, thank you very much.
So, Madam Chair, we do have a public comment scheduled for today that falls under this old business. Joining us online, I believe we have Lou Yu with Virtus.
They just announced you.
Hello.
Hello, we're pulling up your slide deck.
Oh, I cannot hear. 1 second. Excuse me. I have an audio problem. Okay, perfect. Good afternoon. Good afternoon, Madam Governor, and good afternoon to the investment board. My name is Lu Yu. I'm the lead portfolio manager at Virtus Systematic, which is a quantitative shop under Virtus Investment Partners. We have over 2 decades of investment experiences in quantitative investment. Thank you very much for this opportunity to share our thoughts about international small cap space. With that, I have my colleagues here, Zeno, who is going to show us, use a few slides to for this short comment. Zeno, can you please?
They're pulling up the slides right now.
Oh, okay. Do we give a couple minutes then?
Ooh.
If not, I can also pull up the slides.
That'd be great. Thank you.
Ms. Yu, we're not able to share it through video, but we're able to pull up your slides for the members who are here in the room.
Oh, perfect. Thank you so much. Okay, all right. So what I'm going to talk about today is actually 3 things. I hope, 3 takeaways. And the first one is international small cap market is less impacted by the tariff war. And the second one is international small cap market is a market for active investment. And the last one is just to explain how we do it. So first of all, if we go to slide 3, here's what we did here on this slide is that we look at all the constituents in individual index. For example, in MSCI EM index, Taiwan Semiconductor is the biggest name in the index, has about 10% of the weight, and 34% of their revenue comes from US. Same thing, we do the same thing for all the names in EM index, and we aggregate them together to see in EM right now, you have about 13% exposure to the US markets. For IFA, that's a little higher of 21%. But if you look at international small cap ex-US, it's only 9.6%. So this market actually is less impacted by the tariff war. There's still lots of discussion going on. So this is market where less impacted, a little more immune to these tariff discussions at this point. That's the first thing I wanted to talk about. The second one is this is a market where you can see the benchmark is continuously underperforming the broader peer group. So if you go to the next slide, which is slide 4, and in this slide, you will find that the diamond represents the MSCI ACWI ex-US index performance, the ranks of that index. And you can see
whether it's the short term or the longer term, you can see the index always in the third, even the fourth quartile. If you look at the last 15 years, it's literally at the bottom. So this is a market where you do want to have an active in management, active asset manager to manage this space instead of buying the whole universe. So this is, you can see how the divergence of the managers also in this space, and it creates opportunities for the clients to pick a good manager to invest in this space. Another thing that we believe that international small cap is a good space for active manager is that there are many hidden gems in this space where people usually do not know. We did a very interesting quick test. So we actually tried it on Chat GPT, and we asked Chat GPT, what are the top 3 international names coming to an investor's mind? And we got the answers, say Taiwan Semiconductor, ASML, which is the Dutch company, another semiconductor company, or Alibaba in China. So these are the commonly, well-known companies that in the international space that people are aware of. However, there are many names in international small cap space that are equally important, but many investors have no idea of them. For example, when Japan had the tsunami many years ago, more than a decade ago, there was a Japanese very small semiconductor supplier in Japan that almost caused the entire global semiconductor supply chain to be halted because that factory was impacted by the tsunami. So those are the names that are very critical to the whole global supply chain, but very much less known to the investors. So we have names listed on this page as well. And I'm sure, 90% of the room of people in this world have no idea who these companies are. And these are investment opportunities in that international space that can potentially generate good revenue returns for our clients. And going to slide 6, this is another slide to essentially to show you the dispersion among the international small cap stocks. Is if you look at it on this chart, we have 2 bars here. The blue bars represent the correlation among the stocks in the international small cap space, and the gray bars represent correlation among the US equity stocks. The higher the correlation, that means these stocks are mostly more likely move together. And if they are lower, that means they are actually more driven by the company specific news. So you can see whether it's the 3-year, the short term, or the longer term, the US space, in the US space, the stocks actually tend to move together. They're more impacted by the macro news, where the international space, you'll find that the stocks are more driven by its own news and they're less correlated with each other. So that provides more diversification benefits. So,
Ms. Liu?
Yes.
I was reminded by the group that we have a policy for public comment that's about 5 minutes, and we don't know how long your presentation is. Is it possible for you to take no more than 1 more minute and wrap up your points that you would like us to be thinking about and considering for future meetings?
Absolutely. Thank you very much for letting me know that. Yes. So in summary, I hope we have a couple of takeaways today. The first one is this international small cap space is less impacted by tariff in this market regime. The second one is that this is a place that you do want to have an active manager to help you provide you better returns. And if I may close, this is a slide about our team. Again, we are a quantitative team. We capture investment opportunities by quantifying the behavior biases, the irrational behaviors in the marketplace, and also utilize our own AI large language model to generate alpha for our clients. Again, thank you very much for the board for giving us this opportunity. I hope everyone have a good day.
Very nice to hear from you and meet you. Thank you very much for your public comment.
And Madam Governor, we have one more old or new item. I'd like to invite Director Tom Lockton to come up and make a few very brief remarks about how one of our national fund managers is engaging with the most.
But what if I said no?
Did we just get
Absolutely, I would never do it.
Thank you, Governor.
You're very welcome.
And council members, and I'm gonna do just a little bit of a public service announcement too. At the this month at the credit committee meeting, member Mary Roman, Councilmember Bingaman asked for a refresher on the private lending portfolio and sort of a reminder of what are its goals for lending in the private markets, what are the main strategies, geographic breakdown, and then in corporate lending, what kind of situations are we lending to, what are the protections that we're putting in place for ourselves, things like that. So next month we're going to have to be considered for the council's time. It's going to be a 5 to 10 minute presentation that's somewhat higher level, and then we're going to encourage council members, if we want to do a separate, really in-depth meeting, we can really dive into the underlying subject matter. In fact, we're going to have 2 managers next month that are really have some of the best, have some of the longest histories in corporate lending and special situation lending, and they can really speak to what sorts of structures and investments they take on relative to what would be in the public sector. And then secondly, I want to note Pete Sable as well. I know he's been reaching out to his managers. We've been reaching out to private debt managers, public debt managers, to ask them in order to get a commitment from us to engage with New Mexico universities. They've been doing so. Alliance Bernstein, I just want to note to John the other day, is really on the extra mile. They've started an annual lecture series at University of New Mexico. They presented to their investment club, and they brought 3 really good people from their high yield group as well as Jason Brandt, who's in upper management at Alliance Bernstein. He talked to the fact that he started out junior college, 3 years, state school, really came from nothing first in his class, and really I felt connected with the students on sort of what's possible for them. So thank you.
Thank you very much, Tom. And I believe that we've got also signed up for public comment, the good senator.
Thank you very much. I love these food shares.
Me too.
Governor, State Investment Council Committee, this roundtable has always been magic for me. I remember sitting here with Wes Studi and Shirley McLean as we really got the film industry started. And it was one of those magic moments you never forget. They asked Shirley McLean if she was a union member. She was a member of 5 different unions. And I just will never forget that. I would like to thank Charles Woolman for keeping me in touch with the SIC in their activities. I would like to talk about art investment today. 5 minutes is an eternity for me, so I know I can accomplish that.
Well, wait a minute. I've known you for 40 years. I don't buy that. Please proceed, Senator.
I don't know if you can smell what I'm selling, so I really believe that it's a pleasure to be in front of you, Governor, because yes, we do share quite a bit of experience, and it goes back for me to the first time I passed an art investment bill. And at that time, Governor Richardson told me that I had to go to talk to Jerry Peters to see if he would agree that that bill should be signed. Of course, at that time, Jerry was allowing the governor to use his private airplane to go down to Mexico. I didn't stand a chance. And so my bill was vetoed. That also included the opportunity to purchase fine instruments, which, if you could imagine, and I'll use the obvious nomenclature of a Stradivarius, but if you had the state New Mexico Symphony playing with those type of instruments, what a great not only sound they could produce as if they don't already, but also the worldwide attention they would get. Now, when I talk about art investment, I think in the second time I passed the bill, the State Investment Council says you don't need it. You don't need legislation to do this. We have the power to make art investments. And the reason for that is the city of Santa Fe used to be in the top 5 of cities in the United States that was known for their quality of our art investment in our art production and our art displays. I would couch to you that an example of a really good opportunity that exists now is with the Van Gogh Museum in Amsterdam, which is $10 million in the red for their management budget. The country is not going to fund that. They're in a jam. This is an opportunity for us to step forward. Loan them $20 million. Loan it to them at below market rates, and it would be a welcome opportunity for Van Gogh Museum to step forward and solve their problems and give them a margin for error that they may have. Can you imagine if in exchange for that loan, the State Museum was able to put the night sky, put a picture of the sunflowers, and do a present to the world a self-portrait of Van Gogh himself? That's the type of art investment you can make. I would be glad to come forward and talk with you at greater length about this. I understand 5 minutes, and I've always been able to hit that mark. I am a time lord, Governor, as you know. I am glad to be here with you. When I first came into the legislature, I sponsored a venture capital bill, as we called it at that time, for 1%. And I ran it through at a time when many of the minority party was doing venture capital legislation. I was like part of a group of lemmings going off the cliff, and my investment bill was passed. I then came back 2 years later and said, you know, if I can get 1%, maybe I can get 3%. And I presented a bill for a 3% expansion of the venture capital investment capabilities of this institution. Unbelievably, Governor Richardson's staff had no objection to that. And now we know why. He stole its blind. Much of your trepidations around investments in things like art is that you have been burned before. But think about this. I, at that time, represented the Sandia Labs. And my vision was to see us get involved in angel funding with patents that are owned by scientists at the lab. And so we set up a structure where those scientists could own patents and they could access angel funding. That's laid fallow. Even though the expansion of the 1% and the 3%, which at that time was a total of $500 million, that 1% and 3% will get you 500 million plus a pizza. It's quite extensive now because we've done so well with our state investments. I think this is an opportunity for us to see art investment as something that's not risky, that would bring Santa Fe back into the international focus. And there you have 5 minutes.
Well,
I yield to Mr. Bingaman for his motion to approve.
That's a very effective and clever move, and this is the senator that I have great experience with and a point of personal privilege. Senator, the state thanks you for your investment, strategic work, and your leadership in creating funds of this nature and working through Senate Finance and the Legislative Finance Committee in your legislative roles that in large part continued this investment and these efforts. And far too many New Mexicans have no idea which leaders in the state did exactly what to put this group in a position to be able to make these kinds of investments. It's very nice to see
Governor,
you.
that's why these chairs have a back and arms, because I could at this time be falling down. I really appreciate those remarks. I don't hear it very often. And I know you and I haven't seen each other for a while, but you're lucky.
I'm lucky to be the governor. Yes, sir, I am. And it's nice to see you. Thank you.
I would answer any questions from the state treasurer.
You're really brave then.
Thank you very much.
Thank you. All right, do we have any other, I'm gonna look over to the staff. Do we have any other folks signed up for public comment?
No, Madam Chair.
Okay, I want to announce that our next meeting is scheduled right here, October 28th at 9 a.m. And with that, I'll take a motion to adjourn the meeting.
So moved.
We've got a member Bingaman moves to adjourn. Do I have a second?
Second.
Right, got a second? All those in favor say aye.
Aye.
Aye. Any opposed? Motion carries. Thank you, Mr. Clark. Meeting is adjourned. Good meeting, everyone.